Hi there. I just wanted to give a quick update on what is actually going on with what I see as being what's really going on with the metals market moves that happened on on the 30th, right? The last trading day of February, where we had the two biggest liquidity events in history. Apparently, according to some research people, the biggest spike in liquidity in the price of precious metals, and then the biggest crash. Those were the two biggest liquidity events in history. One was a liquidity pump, and the other was a liquidity liquidation. So there's a few theories out there that are being floated as to what happened and why that happened. And I'm going to give you which one I think is most likely really the truth. You can say what you think it is. So there are three theories that are floating around, and I'll go through all three of them and I'll explain why I think which one is actually happening and what all of the moving parts look like to me. So theory number one, Trump announced his new Fed chair nominee, Kevin Warsh. Warsh the car, Kevin Warsh. Okay. So he announced this guy was going to be the new Fed chief, okay, and that Powell's out. And of course, the markets were so deliriously over the moon by the fact that this guy is not a big giant money printer, that he wants to be more reasonable, that of course the markets all just got a massive liquidity dump because no longer did anybody want any risk assets. Everyone was suddenly completely relieved, collectively, all at once, all at the same time. All investors suddenly were relieved enough to dump all their gold and silver. Okay, that's the mainstream narrative. Okay, so that's narrative number one. Tell me if you think that's true. That's what's really happening. Narrative number two, which is coming from AIs, okay, is that there was in fact a attack and a liquidity drain, and it was a attack on the COMEX, and this was a digital attack, and that they drained and siphoned all the metals out of the vaults through this attack, and that caused all the prices to go haywire, and now the books don't settle, and everyone's panicking, and nobody can figure out what's going on because none of the numbers match up. And so when the markets open in about an hour from when I'm recording this, the Shanghai markets, we have multiple scenarios that could play out, and things could go berserk, right? They could go up, they could go down, they could go up and then down, they could go down and then up. We have a week here that is decisive and a decisive turning point for what metals are likely to do in the coming near term, right? Are we going to crash? That sort of thing. Well, I mean, I'll just dispel that for once and for all, because metals cannot completely crash because of the demand and because of the supply shock. There isn't enough. Okay, so we have to have higher numbers unless they're managed to keep a complete fabricated reality alive in the media and in the narrative, which they can do. Okay, but that doesn't mean you can't use silver at real prices. Okay, later on, this is going to go on for a while, these kinds of games and shenanigans. And scenario number three is that insiders of people at the COMEX or some alliance with JP Morgan or other banks that, of course, always are here for the benefit of the public. They're always doing everything for the benefit of the public, and that somehow they, because they're completely honest, never mind that JP Morgan was fined the largest amount in history for rigging the silver market historically in the past. That's a fact. You can go look it up. So, of course, they're totally honest. They're doing everything completely above board and completely legitimate. But so the other theory is that legitimacy that they had, somehow they managed to see where the levels of all the shorts and the longs of the market were for the public, and that they were able to somehow mess all of that up and create a giant liquidation event so that traders were being squeezed out of the market. And then, of course, somehow magically, JP Morgan knew how to buy at the very, very bottom of the market. So they somehow have some really magical ability to get at the very bottom of the market after we had this giant liquidation, which of course didn't have anything to do with anybody at the COMEX reading where all those liquidation shorts were going to be. So, I mean, I think you can probably guess which one I think it is. I think it's scenario 3. I think that scenario 1 is the cover story that was in the media. I think scenario 2 is another cover story that's being generated just to keep people really confused. They don't know what to do with silver and gold in the coming weeks. And we are truly heading into a very volatile week next week, but it's going to start in an hour. It's going to start today on Sunday as the Shanghai markets open. So we're going to get a lot more volatility in the next week. That's pretty much guaranteed, okay, because they're definitely gaming the system in some way, shape, or form. Only, they're truly, completely, 100% doing it the right way. Of course, it's all legal, I'm sure. But that's what I see happening, okay? That's how I see it. And this is something that I've been more or less expecting. I'm not sure if I clearly delineated this exact thing to members. Probably not exactly this, because I don't think I anticipated it being exactly like this. But maybe some months ago, I may have described something coming like this. But just know that if you hold the real metals, you're in good shape. Hang on for dear life, because it's real money, okay? It's real money. They can't change that, especially the constitutional stuff, right? The quarters, the dimes, the silver dollars, the 50-cent pieces that are 90% silver, that are pre-1964. Those are all real money. Those are actual money, constitutional money issued by the government. So that's actual money, okay? And the value of that is going to go up. And this Fed chair guy, just because everyone thinks he's suddenly rosy and good for the economy, just kind of because that's what's in the media, that has nothing at all to do with what he's likely to do. You understand that, right? They can say anything and then do whatever they want. And that's how it works. So, yeah, that's what I wanted to come out and give you guys a heads up on, that there's these confusing narratives out there. And I just want you to kind of see through and x-ray the truth of what's going on in the market here, okay? So you understand that the confusion is out there to confuse you, and I don't want you confused. The way through the confusion is hang on for dear life. Don't let go. Keep your metals. That's it. That's what I've got to say for you. And by the way, I'm always saying that trading the metals, doing it in the paper markets, that's a bad idea. And this is exactly why, okay? Because paper traders got slaughtered over this giant move, okay? They lost their shorts, literally. And, of course, the banks are, they have to save their own skin. That's what they're doing, because they're in a lot of trouble with silver at this high prices that it went to. So that's it. Let me know what you think. Which theory do you think it is? Do you think it's number 1? It's the Fed announcement, a nomination? Do you think it's number 2 with the AI guy putting out the story about how it's a robbery and all the exchanges are going offline and everything is being shut down because they have this excuse that we're being robbed? So now we don't have the silver anymore. Or is it number 3 that there was some shenanigans taking place? Let me know. Talk to you later. Bye-bye.